Tech stocks sold off strong, and now they're starting to bounce back. Where does the truth really lie on the future of AI investing? Luke Lango with Investor Place joins us now to break it all down. Luke, I'm really excited about this conversation because this is really what just about every investor is talking about right now.
Yeah, Bridget, thanks for having me. Very good time to be talking about this very specific thing.
Yeah, it seems like just the last 2 days, we've started to see a rebound. But prior to that, everyone was talking about AI sell-off. Has the bubble actually popped? Do you think that there's some truth to the sell-off still being a part of the story, or is this rebound here to stay?
To be frank, and just to cut straight to the chase, no, I don't think there's any truth in those AI bubble fears or these AI spending slowdown fears. I mean, what they were all about, it's this financing risk. There were concerns about the financing pathways, the financing viability for the AI build-out. Building all these data centers, expanding compute rapidly, standing up GPU clusters, getting the power connects for them. That cost a lot of money. CapEx for the hyperscalers in 2026 is expected to be about $530 billion, so over $500 billion. This is a very expensive undertaking. And that's fine so long as money is being put up to finance the expensive undertaking. But there were signs, very legitimate, very real signs over the last 2 to 3 months, I think they started back in October, that parts of the financing picture were starting to get stressed. There are 3 ways the AI boom gets financed. 1, cash financed. 2, debt financed. And 3, private equity financed. The cash financing, not a big concern. That's where Meta is taking all their free cash flow and Alphabet and Microsoft taking all their free cash flow and plopping that into AI data centers. Okay, that's not stressed. But the debt side started to get stressed. Oracle, they are the kind of ringleader of the debt finance build out of AI data centers. They've tried to do multiple bond sales in the last few months that did not go well, were not well received. The value of their bonds have been decreasing rapidly. So you started to see stress in the debt markets. Then you started to see stress in the private equity markets because, again, Oracle was trying to stand up a $10 billion data center in Michigan for OpenAI. That the money for that was going to be put up by Blue Owl, a big private equity firm that's been behind a lot of these data centers, and reportedly they pulled out of the deal. So that deal kind of got stuck in limbo. So there were signs of private equity stress, there were signs of debt stress, no signs of cash stress, but 2 vectors of this 3-vector growth story started to show stress. And that's why AI stocks sold off starting in October and continuing in November and December.
Yeah, absolutely. We're starting to see, it's really the end of December. We're finally starting to see a turnaround after what was really a brutal December. Almost all of December was down for a lot of these big tech names. I know you have a list for us today, or really highlighting the top tech stocks out there that are seeing a huge rebound right now. So we're going to get into some of those specific names in a second. I want to go a little bit more. I think the debt discussion that you just brought up is so interesting for AI. What really changed to take away that concern?
Reports were released this week. First, the information reported on it on Wednesday, then the Wall Street Journal confirmed it on Thursday. OpenAI is looking to do the biggest venture fundraising round ever, up to $100 billion. And it increasingly looks like that $100 billion number is not like some lofty goal, it's the target. They are going to raise $100 billion at an $830 billion valuation, and it's expected to close at the end of Q1 2026, so within 3 months. $100 billion is massive. They raised, I think the reports had, and they had about $20 billion in cash in the balance sheet at the end of the first half of 2025. They're raising another $40 billion from SoftBank. So by the end of this year, they should have about, $60 billion, give or take, on the balance sheet. You throw in another 100 on there, all of a sudden you basically triple their cash coffers to $150 billion plus, and that bridges them hypothetically towards profitability, towards getting into the black by 2029. So if they really do close that $100 billion round, they have all the money they need to keep on spending. And apparently the companies or the people, the entities that are coming in to back that are sovereign wealth funds. And when you're talking about a $100 billion raise, that can't come from, little venture investors. That can't even come from Sequoia Capital, the biggest VC funds in America. It has to come from sovereign wealth funds. They're stepping up to the plate. They're playing the part of Santa. That has downstream effects because this is a race. So now all of a sudden, one person in the race, the leader in the race probably, just got an extra $100 billion to throw towards standing up compute. What does that mean? The debt investors, the debt markets look at that and they're like, oh man, if the Saudis are putting in 100 billion, you know what? All of a sudden they open up their taps a little bit more. Private equity guys see that, they open up their taps a little bit more. Big tech sees that, they take more of their free cash flow and put it into data centers. So that was the tip of the spear, has downstream effects. And what it tells me is that in 2026, AI spending is not going to slow down one iota.
Yeah, and I think some investors might be wondering, did I miss the rebound? Did I miss that low point? Is there going to be any more volatility from here on out? And that really is the question. But let's look at some specific case examples. I think the OpenAI discussion is also interesting because we know investors, we can't invest in that specific company yet, but there's so many other companies impacted building out these data centers. And that's part of the conversation too. So let's talk about one of those stocks where we're seeing that rebound happening so quickly that you think could have an even bigger rebound in the year ahead.
When we're talking about who's going to win from this, it's the companies that are going to be the beneficiaries of all this spending. It's not OpenAI in particular, or it's not the spenders in particular. It's the ones winning the money that are downstream from that spending. And that is, the poster child of the sell-off in the last few months has been CoreWeave, CRWV. They are a highly levered digital landlord. That's what they are. They get a bunch of debt to go stand up data centers and then sell that compute out to customers. That is the most leveraged business model of all time, really. It's a business model that is going to work wonderfully when the spending is flowing and is going to work horribly when the spending is not flowing. CoreWeave stock jumped from 60 to 200 when the spending was flowing earlier this year. And then when there were fears the spending was stopping, that's a stock that fell from 200 all the way down to, I think out to the mid 60s or low 60s, got absolutely decimated. But now that we're getting confirmation that those fears, those spending slowdown fears were overstated, but it's still, 60 to 70% off its previous highs. So is there runway left? Absolutely. It's a high beta, high leverage name that if the spending taps stay open and accelerate in 26, will do really well.
Yeah, that's a great example of a stock that has come down so much, really had that brutal December, November that we talked about and is already starting to rebound. Great point, though, about a long runway ahead yet for that one. I think another poster child for this rebound and really an example of that AI spending not slowing down is MU. Let's talk about that one too.
Yeah, so Micron is, they supply memory for data centers, very big component in data center build-outs. Memory is super cyclical. Historically speaking, if you look at a stock chart for Micron, this is one that goes up a bunch and down a bunch, and it goes kind of like a sinusoidal wave. Like it goes up and down and up and down and up and down. It's super volatile if you look at the past 20 years of that stock. So this is a stock that very much like CoreWeave will perform wonderfully when the spending taps are open and will perform poorly when the spending taps close off or start to slow down. Once again, we're seeing the spending taps reopen for an accelerated spending burst in 2026. Micron just reported earnings. The biggest part about that earnings report was not they did crush the numbers, their quarterly numbers, but it was next quarter's guide. Their guide was double what Wall Street was looking for. That's absurd. They're going from 60 to 70% growth to 150, 160, 170% growth. So Micron issued that guidance before this OpenAI news. So I really like Micron stock. It's a highly cyclical name, so it's not a name you buy and hold for 5 years.
Yeah, I think I saw a headline sometime this week just after the earnings came out for Micron. It's one of the biggest earnings beats since NVIDIA, really comparing Micron's report to an NVIDIA report. And I think that's a really big deal that investors can't ignore for Micron.
Yeah, now very interestingly, one thing I would kind of put a little caveat in here is there are a lot of names out there throughout the AI supply chain that we really like on this rebound. There's stocks that were up a lot, down a lot, and now they're coming back and it's the beginning of a big comeback, big U-turn. I think there's a lot of great plays in there. And you just brought them up. One name we're not that bullish on is NVIDIA, which is weird to think about because they're the big kahuna, they're the mothership, right? Everyone's been riding in their wake, but we are not bullish on the mothership because we think that the industry is moving away from the mothership, actually.
That is really interesting. And I think some other analysts that we've interviewed on the show would agree with you that the competition is heating up a little bit for NVIDIA and that there's some other companies coming up who might start to take away some market share. Would you agree with that?
Yes, I would say that the other companies, quote unquote, coming up are the already established giants called big tech that, I have friends that work in the industry, and for years, NVIDIA has developed a reputation of being unnecessarily and excessively arrogant. that they are the hardest company to work with. They don't budge on price. They're not friendly with their deals. Deals are done on their terms, their timelines. Well, that's not how you do business, good business. But second off, you don't treat Meta that way. You don't treat Microsoft that way. You don't treat Amazon that way. These are the biggest companies in the world with a lot of resources. And so for the past several years, even though NVIDIA has had a lot of success, in the background, these big tech firms have been pushing on their own custom silicon efforts, their custom AI chip efforts. Now, those efforts have been, fits and starts here and there, 2 steps forward, 1 step back. But the big breakthrough happened with Google. That Google is the leader, Alphabet's the leader in the custom chip race, I would say, with their TPUs, their tensor processing units, are the most advanced, most mature custom AI chip outside of the NVIDIA's GPUs. And they had a huge breakthrough with the Gemini 3 launch. That when Gemini 3 launched, everyone was like, whoa, this model is so good. It's like way better than anything else out there. Why? The TPUs. That model wasn't built on NVIDIA GPUs. It was built on Google TPUs. The world took notice. A week later, Meta's like, knock, knock, Google, we want your TPUs. So Meta now is buying billions of TPUs instead of billions of dollars worth of NVIDIA GPUs. And then knock, knock, a couple weeks later, we see Meta and Google teaming up on creating their own software to go after NVIDIA's software, CUDA, because that CUDA software that sits on top of the hardware layer for NVIDIA is as big a part of the story as their hardware. Then you have OpenAI teaming up with Amazon in a $10 billion deal where OpenAI is going to start buying Amazon Trainium chips. So what you're seeing is Meta, Alphabet, Amazon, Microsoft, OpenAI. These are the biggest, most powerful companies on the world, and they are all collectively attacking the NVIDIA fortress. NVIDIA is a great company, but I don't think any company can withstand that onslaught from the biggest, most powerful, deepest pockets in the planet.
Yeah, that is really fascinating to think about. If you've got all the tech giants in the world ganging up on you, how long can NVIDIA stand in that leadership spot? Interesting to think about that whoever wins this tech race, especially with the hardware specifically, you're going to need the materials to do it. You have a free special report just for our viewers to look into today with a deeper dive into rare earth stocks. It's a lot of educational resources that you can look into for yourself. Luke, share a little bit more about this research you've been doing.
Yeah, so the White House has employed this new method of or model of state-backed capitalism. I think it's here to stay. It's a technocracy type movement where you're seeing Silicon Valley and Washington, D.C. team up to prioritize initiatives that they think are necessary for the defense of the United States of America, of Western values, of democracy, of things of that nature. If you want to kind of recap of that, Alex Karp's book, The Technological Republic, is a great read. It kind of synthesizes what's actually going on right now. Alex Karp's the CEO of Palantir. So we think this is a new era of capitalism. And in this new era of capitalism, Washington, D.C. supports Silicon Valley industries, very specific industries. What industries? Materials, critical materials. What materials are critical to the AI build out, to national defense, to national security? Rare earths. And so we think that the White House, they made a big play on MP materials. We don't think that is the end of the story. We think that is the first chapter of a very long story of D.C. supporting rare earth production here in the United States and supporting a lot of players in the rare earth supply chain and a lot of stocks. MP stock went on a run from $10, $15 up to $90. It's come back down to around 60, but still on a very solid uptrend. We think other stocks will follow in its wake, and that report talks about a few of the stocks that we think can follow in the footsteps of MP over the next several years as this new technocracy kind of takes shape in America.
It's certainly going to be a story for a long time and such an interesting sector to watch too. Again, you can check the link for that free report if you want to look more and do some research of your own into rare earth stocks too. It seems like it's going to be important for a lot of the stocks and lots of the companies we're talking about here today. And let's get right into it. Let's get into these last 3 names that you have for our viewers today, because these are all really interesting stories too.
We ran a screener to find, okay, the stocks we're looking for right now are stocks that were big winners in the AI boom, got hit really hard in the last few months, but are now rebounding viciously. So stocks that led us on the way down, but now look like they will lead us on the way back up. What are those stocks? When we ran that screener, the consistent theme we found was neoclouds. These companies that are standing up new data centers, not the hyperscalers, but the non-hyperscalers that are standing up data centers and renting them out to the hyperscalers. CoreWeave is one of them. The other 3 are Applied Digital, APLD, Nebius, NBIS, and then the biggest of them all, Oracle. So with those three names, you have big neo cloud operators. Some of them have a lot of leverage, and that actually gives them leverage to the upside if the rebound does persist. I would say Oracle in that group is our least favorite of the three. I think Applied Digital and Nebius have more upside because they're smaller and nimbler and actually growing much more quickly than Oracle. They also don't have a legacy compute business. The Oracle is dealing with a legacy compute business that kind of dilutes the growth rates for the overall business. So Oracle to me in that group of four neo clouds is the least exciting, still something we're excited about, but the three we're most excited about would be CoreWeave, Nebius, and Applied Digital. Names that look really risky. On the onset, you look at the charts like up a lot, down a lot, like it looks really crazy. Well, we think right now the craziness is about to be to the benefit of shareholders as the AI spending boom kind of really picks up more momentum.
Yeah, these are all names we've talked about on the channel many of times. Oracle kind of the poster child for volatility the last few weeks and months. But I want to highlight one of the names there. Nebius was the first name I added to my Bridget's Buys watch list. It's a new watch list where we track how stocks are doing that we talk about on the channel here. And I got Nebius added to that watch list when it was on that big downtrend. So if you want to check out how well it's doing since then, you can check out the Bridget's Buys watch list too. That's just marketbeat.com/Bridget and check out Nebius. I'm glad that you mentioned that name though, Luke, because it's one that I have also been excited about for the future. Same with Applied Digital. We started talking about that stock when it was around $5 on this channel. So it's definitely one that seems like it should have a strong future ahead of it. Let's just finish up the conversation today with any other final thoughts on whether we could expect more volatility or if this rebound is just going to be up and to the right through 2026. Or do you think that there could be a little back and forth yet?
I think we're gonna have a very volatile 2026. I think we're entering year 4 of the AI boom, right? If the AI boom started with the launch of ChatGPT in late 2022, then year 1 was 23, year 2 was 24, year 3 was 25. We're entering year 4, 2026. Parallel to dot-com boom, that means we're in 98, 99. The dot-com boom started in late 94 at the launch of Netscape. So we're in that 98, 99 parallel. At 98, 99 were fantastic years for the NASDAQ. 99 especially, the whole entire NASDAQ complex doubled. But it was not without volatility. You had huge overall gains, but a lot of big drawdowns. Old school adage tells you, history tells you, you can expect a 10% correction in the S&P 500 in the stock market about once every year. Well, we had 4 in 1999. We had 4 10% drawdowns, 10% plus drawdowns in 1999. We had 2 in 1998, including a 30% plus crash. So that was a very volatile time. But overall, the trend was up and to the right. So it wasn't 2 steps forward, 1 step back. It was 20 steps forward and 15 steps back, and then 20 steps forward, 15 steps back. That's what I think 2026 and 2027 look like. The one thing I would watch as a potential wild card is going to be as we get into the midterms in late 26. I think AI becomes a political hot topic. And right now, Trump is pushing really hard on this one rule thing. No regulation. There's one national rule for implementing AI, and the states don't get to decide, and we're going to cut all the red tape and let them run, not stifle innovation. I think that's going to cause a lot of political turmoil going into the midterms, and you're going to see a lot of pushback, and there's going to be concern in the markets about, okay, what happens if power flips in the House or power flips in the Senate? Are we going to start to get regulations? And you're going to see volatility in stocks at that point in time. So I think we have a pretty good runway here, a pretty high visibility towards really strong gains in AI stocks up until, I would say, late summer. And then I think you're going to start to see a lot of volatility going into the midterms. Hopefully that resolves after the midterms. We can continue that up into the right movement. But I think, we're definitely going to get a 3 to 4 month stretch there in the third quarter where it's going to be pretty into the fourth quarter where it's going to be pretty choppy. But the first half of the year, I think, is going to be really, really strong.
Yeah, buckle up and get ready. Election year, even though it's the midterm year, like you said, it's going to be a little choppy for sure. A good prediction for 2026, Luke. If you liked what Luke had to say about NVIDIA maybe having not the best tech stock to look at right now, make sure to watch this video from Mark Chaikin to see what he says about some tech stocks to watch now too.